Hello and welcome to BQ Prime. I'm Hindalco. Joining us on the show today to discuss the movers and shakers and sectors that are in focus is Devarsh Vakil from HDFC Securities. Welcome to the show, Devarsh, and a very good morning.
Good morning. Pleasure to be here.
Devarsh, my first question coming to you is over the last two trading sessions, you have railway stocks that have been in focus and a good up move that has been coming in there from an RVNL to a Orcon, IRCTC, good prospects, good order book. What's your view and what would you advise?
We like this space. We have been continuously bullish on it. We have recommended this space. The change which has happened here over the last couple of quarters is quite significant. See, earlier these companies were basically getting the business on the nomination basis from the railway board, or the Indian government was giving them a fixed margin cost plus orders. Now, over the last few quarters, they have started bidding them. They have started winning business on a competitive basis. Other than that, they have also diversified their business away from the railways. These companies have started getting into road construction, highways, and that kind of businesses where they have got orders and they have diversified their business prospects. Apart from that, they have also diversified geographically and they have gone out of India and started winning businesses in many other emerging countries, developing countries. They have won business around and in and around India, like Bangladesh, Bhutan, Sri Lanka. Also in Africa, they have got a lot of businesses, and also in Latin America, like Brazil. So these companies are expanding their business geographically. They are increasing their business pie over different sectors, and that's why this re-rating has happened over the last few quarters. I think obviously they have run up a lot, so there could be some short-term pullbacks. But once there is a decent correction, I think investors can look at these stocks. They are headed much higher from here. Heedal, I'm not able to hear you. I think you are on
Sure,
mute.
yeah. So I'm saying so that's with regards to the railway sector as a whole. Good investment bet coming in there. Moving from there on, if you see in terms of few of the banks are buzzing in trade, you have a Central Bank of India, Bank of Baroda, both these counters trading under pressure, and that's because of the exposure that they have with regards to go first. Overall, what's your view, Devarsh, if you have to look at these two specific banks and the PSU banking space?
So, PSU banks, I think, is the one of the single most attractive opportunity in the market right now, according to me. So, apart from these small hiccups and the number of amount in question is very small, so I don't think that will impact the balance sheet that much. But apart from that, these companies have been able to pass through the NPA cycle. And over the last couple of years, because of the corona and because of the slowdown in business, they haven't landed much. So I don't think there is incremental surprise on the NPA side. The operating profit they are earning is humongous. I think that is going to change the balance sheet of all these companies over the next 2 to 3 quarters. These companies usually, on the peak of the cycle, trade about 2 times to 2.5 times its adjusted book value. They are hardly at 1 to 1.5 times. So there is significant room for appreciation in these banks over the next 3 to 4 quarters. So such pullbacks, such bad news are a good opportunity for value investors to accumulate these stocks.
Right. That's with regards to the PSU banking space as a whole. Moving from there on, you have a Tata Steel that reported numbers. What's your view specifically from an India business perspective? And secondly, they've clearly indicated in terms of Europe, there could be corrective measures that could be taken. What would you advise an investor to do with the Tata Steel?
So I think it is a good opportunity. You see, we know that the IMF recently came out with the global growth, and they see that the growth in the world is going to be driven by two countries, India and China. And we saw that the on the back of China opening, they have revised the growth targets of China now. So a lot of pessimism which was built into the metal prices, I think that is now unwarranted. We have seen that the metal prices, especially the steel prices across the world, has moved up about 5 to 10% over the last 1 month. And the way they have done the balance sheet cleanup and the kind of firepower they have, I think companies like Tata Steel and other domestic players will be able to participate in the growth cycle, which is going to be starting now. So I'm actually quite bullish on metal stocks on general, and the one particular stock which you mentioned. The fallout of what has happened in Europe eventually will lead to a lot of reconstruction. India capital expenditure cycle is there where a lot of capacity buildup is going on, which will help metal demand. So, and China is also opening up quite nicely. So I'm bullish on the prospects of metal, and I think these Asian companies, China and Indian companies, are going to rule the metal world from here on. So investors can look at these companies on declines.
Right. Moving on, apart from this, you have real estate companies that are in focus as well, a DLF, Prestige, Sobha, and the anticipation is that there is good demand coming in there. Probably there could be a shortage of supply now. How are you viewing the real estate space, and what would your topics be?
So real estate, the commercial real estate players had a bad time during the corona, and they were struggling for finances. The residential business was more or less good, and because of the demand for work from home and a higher larger size of the homes, people actually did snapped up a lot of inventories, and those inventory numbers are reducing, and we can see those from the disbursement numbers of the housing finance companies. So both the drivers, the institutional driver, the infrastructure side, the commercial real estate, as well as the residential real estate, all are firing for these real estate companies. The cost side, they had some pressures, and because of that, their margins were under pressure because of the higher metal prices and higher input prices. Now, over the last 3 months, metal prices have corrected. The other input prices like coal and everything has come down. So the benefit of the higher margin will flow into downstream companies in real estate also. So selected companies where we have good balance sheet, we have uh, a balance sheet to execute the orders they have. I think we can look at those companies.
Right. Now, moving from real estate, another space that comes in immediately is the cement space. You have ACC, Ambuja, all these companies that have reported numbers. If you see in terms of the EBITDA per ton, etc., what is it indicating, and what would your view be?
So, for example, you said Ambuja Sim. So, Ambuja announced the results, and they have been able to improve the per ton realization bit. They have very ambitious target. They want to reduce the cost and increase the margins by 400 metric ton, and they have given the guidance. They want to do the capacity expansion. They want to reduce the operating expenditure. ACC also, they have recovered and about 70 metric per ton. They have improved the realization. So their realization is little weak. They are only 550 rupees per metric ton. But in general, all cement companies are going to have about, on an average aggregate, about 800 to 1,000 rupees per ton, the realization for the FY24. So if they are able to generate that kind of margin, then it is going to be a good year for cement companies. And reason being that one of the major inputs for them is the energy, as we know, and coal prices have corrected a lot. They had some benefit for few weeks in this quarter, but I think the April, May, June will be the real quarter where all the benefits of the lower energy cost will start flowing into the cement companies. The top line growth is there, as we have discussed. All sectors, whether it is residential, infrastructure, or commercial, there is a decent demand for cement companies. So these numbers are going to be soft once the quarterly results are out. And if we find some companies where they react negatively to the results, that would be an opportunity to accumulate cement companies with a view to benefit from next 3 to 6 months, where I expect margins to recover sharply.
Right. So that's with regards to where cement companies go. So a lot of sectors, from railways to banks to real estate to cement, these are few which are on the radar as well from an investment perspective. Thank you, Devarsh, so much for joining us on the show and giving us those views. Stay safe and speak to you soon again.
Right. Thank you. Have a nice day.
You too.